know where you just come from.
See, body, they shine like tomato seed.
Now that's why you see. You don't see his cheek as the rosy, as he face the shine.
Gentlemen, stop embarrassing me. Look, all these things you're talking about, me looking chubby and all that, I mean, it's because of the society you come from. I mean, right there, you have constant light, there are good roads, and the environment is clean.
Yeah.
But of course, not for free. You pay your taxes. Well, when you pay your taxes, all these things are provided. And if you fail to pay your taxes, of course, you go straight to jail.
Jail because the person don't pay tax.
Even self my pally tell me say for sometimes before for Nigeria everything they work like that. All of a sudden
it's true.
Things just change because we don't know where they take the money do.
Listen, if you want good life, pay your taxes. And then let the government use the taxes you pay to provide this infrastructure and the things you need for good things of life. So, all you need to do is pay your taxes. That's all.
The truth of FIRS says
it pays to pay your tax.
Sure.
Yes, indeed, it pays to pay your tax. The message is very clear. Tasty soup costs money. And you can expect more from where that came from the Corporate Communications and Liaison Department of the Federal Inland Revenue Service. Thumbs up for them. Last episode of the program was a feedback episode, and it revolved essentially around value-added tax. Today we are moving on to personal income tax, and the reason is not far-fetched. Personal income tax is the one that affects you. It's the one that affects me. It affects our pockets. And we're going to be looking at personal income tax from the perspective of the Personal Income Tax Amendment Act 2011, which President Jonathan signed into law in the year 2011. The program is Tax Matters, and my name is Olumoyiwa Matuluko.
Chineke me, they don't increase my salary money. No be mistake. Oga accountant do so. Papa Junior, you never hear of Peter. Now the new MD be that. Talk now.
Peter, na Personal Income Tax Amendment Act, where Mr. President just signed for law to better the life of them people, so them to go get more money to enjoy with them family. You see this amended act, I don't reduce the tax we do on top your salary money. They can't increase consolidated allowance money where we go to get every month. And you know, say, that the president will listen if you do better thing for the people.
Mr. President, you do well, oh. I'm blessing you, they think of me when you they sign this bitter. Now, I feel do boku things this year. I feel rent shop for Mama Junior, buy textbook for Junior, send money go village, make the thing begin build my house.
So, you say I'm going to be landlord?
Of course. Oh, you this is our country for you. Peter, Peter, hey, Peter.
JTB, creating a tax-friendly environment.
The first issue has to do with why the amendment to the Personal Income Tax Act. Yes, why? The overriding aim of the Personal Income Tax PIT administration is to make tax administration more equitable and to encourage voluntary compliance. Why do we say more equitable? Prior to now, if I am in paid employment and I have another friend in private business and both of us make 5 million at the end of the year, most likely because the fact I'm in paid employment and the way my salary is structured, the total income exposed to tax liability might be like 3.5 million. Because I'll enjoy housing, non-taxable housing, non-taxable transport, non-taxable meal, non-taxable utility. The other friend of mine who is in private business will not enjoy all this. So with the Personal Income Tax Amendment 2011, all these have been brought together. You now have, both of us will now be assessed on the same platform. That means as an employee, irrespective of the way my salary is classified, I'm not going to enjoy any non-taxable allowance again. Like the man in private practice who does not enjoy any non-taxable transport, housing, and what have you. So we are on the same level. And the intention is to encourage voluntary compliance. Then it replaced the completed system of calculating tax and reliefs. Yes, before now, the reliefs is complicated. Yes, 20% of earned income plus 5,000. There's a question. What constitutes your earned income? Is it the big salary? Is this basic salary plus allowances? Is it basic salary allowances net of non-taxable items? It became so difficult for us to even calculate. So even the tax authority, even in the same office, we have issues. Somebody will say, no, sorry, the personal allowance is computed on basic only. No, others will say, sorry, it's computed on the total income. Others will say, no, sorry, it's not computed on total income, but on this. We have issue with that. But now, the whole thing has changed. The totality of your income, irrespective of whether it is earned or what, on earn, the income is your income. We give you total relief on that. So there is no classification again as to what constitutes earn and what unearned income. Now, an individual is entitled to only consolidated relief allowance, CRA, which is higher of 1% of gross income, or 200,000. The higher of 1% of gross plus 200,000 plus 20% of gross income. Your total income, gross, both from earned and what, unearned sources, because yes, it's the gross, is your total income. The total income now, you earn, you earn personal allowance on that. And then these contributions prior to now were not expressly listed in the Personal Income Tax Act as tax exempt. One of the major advantages of the amendment is to bring all those exemptions as stated in other various acts into the Personal Income Tax Act. For instance, the National Housing Fund, the Act specifies that whatever an individual contributes to the fund shall be so exempt from taxes. But the Personal Income Tax Act did not exempt, okay, such a contribution from taxes. The National Housing, the National Health Insurance Scheme, the National Pension Scheme too, the Act, 2004 Act exempts contributions from taxes. But the Personal Income Tax Act itself did not exempt such contribution. And the argument has always been that the other acts cannot give exemption except as given by the principal act, the Personal Income Tax Act. But if care is not taken, other acts will say, okay, fine, you don't pay taxes because, on this. However, the principal act, the Personal Income Tax Act, will still be there, not exempted. So most of the tax authority officials were confused. The man works with his Personal Income Tax Act. Whatever is not listed as tax exempt in the Personal Income Tax Act, the man will tell you, sorry, is not exempt. But the Personal Income Tax Amendment 2011 actually did a nice job of exempting this. Then the tax rate too has changed. The new rate, the first 300,000 now, at what percentage? 7%. The next 300,000 at 11%. The next 500,000 at 15%, as given there. The next 500 at 19%. Thereafter, 1.6 million at 21%, and above 3.2 at 24%. So the top rate tax now, the rate of tax in Nigeria now is just 24%, as against what? 25%. So the Personal Income Tax Amendment has gone further to encourage us to pay our taxes, because the tax rate has gone down, and then the band also has been expanded. Then we have the replacement of the body of appeal commissioners with the appeal tribunal under section 59 of FRS Act. There was this argument that means one thing. If I'm not happy with the assessment that's raised on me by the Internal Revenue Service, the first port of call is tax appeal tribunal. The answer is no, please. There are process of objecting to the assessment. You first and foremost object to the assessment. If an assessment is raised and served on you, object to the assessment first and foremost. Before you now, where the revenue authorities say, sorry, we refuse to amend the assessment based on certain reasons, or you cannot convince them beyond any atom of doubt that they should reduce the assessment. Thereafter, you can go to the tax appeal tribunal. You can't just go to the tax appeal tribunal as the first point of objecting to the assessment. Please take note of that. That's one. Two, The tax appeal tribunal is to look at facts of the case and not to interpret the law. If the issue is interpretation of the law, it is the High Court that is such constituted to interpret the law. The tax appeal tribunal will look at the facts. You say, DK, you are on 2 million. The issue is not the law. And we raise an assessment on him based on 2 million that we assume that happens to be his income. And say, sorry, that's not my income. My income is about 500,000. The issue here is what? Facts. 500,000 against what? 2 million. Okay, the tax appeal tribunal will listen to that and say, fine, from all indication, the gentleman's income is 500,000 or 750. If the issue is the income is not taxable, it's okay, a particular income is not taxable and it requires interpretation of the law. This is beyond the tax appeal tribunal.
Something for the lawyers to chew on. We are not aware that Mr. Bisi Ali is a lawyer. Or better still, tax appeal tribunal secretariat. Over to you.
So there is nothing we can do. I can't believe this. Last year I let it go. This year my tax assessment is even worse. They keep doing this because they know there is no one we can complain to.
But there is.
Really?
Yes. You can go to the tax appeal tribunal.
Tax appeal tribunal?
Yes.
The Tax Appeal Tribunal is established to resolve all tax disputes between taxpayers and the Revenue Authority. So when your tax disputes are not resolved to your satisfaction, the Tax Appeal Tribunal is there to help. You can visit any of our offices nationwide or call us on 0987-61170 or email info@tat.gov.ng for support. Tax Appeal Tribunal, building confidence in Nigeria's tax system.
Mr. Ali continues, this time on the vexed issue of residency. Where do you pay personal income tax?
Before we start calculating what an individual should pay, there's this issue of what? Residency. Yes, residency. Where should an individual pay his taxes? The law is very clear. Where the individual is ordinarily resident. And then ordinary residency is taken to mean where he has his domestic abode, excluding hotels, rest house, guest house, or temporary short lets, where he has his what? Regular residency. Because of the closeness of states to one another, it's not impossible for an individual to be domiciled in a particular state and draw his economic interest from another state. So there's always a problem here. Where would that person pay his taxes? The law is very clear. Where he has his what? Ordinary abode. Yes, it's not impossible that the man works in Lagos, but he sleeps in Ogun State. He leaves Ogun State as early as 4 o'clock in the morning, rush to Lagos, even with his wife and children. The children attend schools in Lagos, and they won't leave Lagos until maybe 6 or 7 at night, and won't get back to the place they stay in Ogun State until like 12 or 10, and sleep in Ogun State for just less than 4 hours. Is that okay? And they are back on the street again, rushing to Lagos. In fact, it's very sad that even on Sundays, they come to Lagos to worship. Is that okay? So apart from the fact that they draw economic interest from Lagos, their God is always also involved in Lagos. They have their spiritual life in Lagos. However, the law says they must pay their taxes where? In Ogun State. Not only Lagos. We have issue in Federal Capital Territory. Is that okay? Some people stay in Nasarawa, but they work in Federal Capital Territory. Others stay in Niger State, Suleja and what have you. They work in where? Federal Capital Territory. The same issue happens between Rivers State and Bayelsa. A lot of people commute on daily basis between Port Harcourt and Enugu on daily basis. So they make their income from Yenogua, but they reside where? In Port Harcourt. But the law is very, very clear. We might be a little bit emotional about it, but the law is very clear. It becomes very difficult for the employer of labor now. Indirectly, as an employer of labor, you now have to be accountable, if possible, to more than one revenue authority. Is that okay? Yes, you have to be very careful as to, you must know where your employee stays. You must know. It becomes important now, so that you will know which revenue authority you are now accountable to.
And on how to compute, or if you like, how to calculate personal income tax, what do you pay?
Let's look at the taxable income and allowable expenses now. The Personal Income Tax Amendment 2011 amend the Principal Act by substituting for paragraph B a new paragraph B. A new paragraph B. And it says the income taxable is made up of any salary, wage, fee, allowance, or other gains or profit from employment, including compensations, bonuses, premium, benefits, or other perquisites allowed or given or granted by any person to any temporary or permanent employee other than so much of any sum or expenses incurred by him in the performance of his duties, and from which it is not intended that the employee should make any profits or gains. The implication of this amendment is that the total emolument of an employee's income is taxable. That's the new law. The old section B exempted some items listed 1 to like I think 17. That was where it was mentioned then that housing allowance of 150 is exempt. Basic leave bonus is exempt. Utility is exempt. Transport is exempt. Medicals to some extent, if it's reimbursable, is exempt. Cost of passage and everything is exempt. The practical implication is that the new section, the amendments, the B, stop at profit or gains. There's no exemption. That means the income of the employee is taxable, irrespective of the manner in which the income is classified. This provision effectively cancels all non-taxable portion of an employee's income as listed in the deleted subsection B. Subsection B 1 to what? Yes, 13. Like housing, transport, meal, and what? Utilities. So that means, irrespective of the way you classify the income of an employee, it does not get any tax benefits. No more tax benefits. If you want to talk about restructuring salaries, there is no gain again. The only other restructuring that one will end up doing is to do illegal restructuring. So the best thing you can do with your employee is that, sorry, my intention is to pay you 2 million naira. The tax obligation I have on this 2 million naira is, for instance, 400,000. So that means the net you are taking home, please take note, is 1.6. If the man agrees, he takes the job. Don't tell him, I'm giving you 2 million. And that's why people will start agitating. By the time you now impose the tax as prescribed, the guy will say, no, sorry, when I signed this agreement, I thought I would be going on with 2 million. You're now giving me 1.6. The guy may not have any option other than to take it now. But you can be rest assured, 3 months, 6 months down the line, he will come back and ask you for increase in what? In salaries. Don't go into contract without looking at the tax implication of it. Then we try to look at filing and payment process. This is just a way of reminding us that apart from computing what we should pay and how to go about paying, we know what to pay now. We know how to apply the law now. We know what the law says, the release and allowances we know. But we have to be mindful. We need to file our returns. The law has not changed as relates to filing of returns. You have to file your returns if you are self-employment on or before 31st March of every year. The question might be this: what is my returns? Do I need to fill from A? You fill the big from A. If you need to do some further attachments, it's better to do a statement of your income, okay, and expenses. As a self-employed individual, it's better for us to have accounts. Let's push the issue to the tax man. Yes, that I run a business, I'm a tax practitioner, this is my gross income in the year 2011, these were the expenses incurred in order to make that income, this is my net income from the business. Sign it up and give it to him. You can't say I did not incur rent unless I tell you I run it from my house. Even where I run the business from my house, it has been decided severally, and there was a particular case, FRA Williams, yes, versus Western Region Tax Authority. The man ran his business then from his house, yes, from the comfort of his 3-bedroom flat. And at the end of the year, he said, sorry, I have to apportion, okay, the rent, because it's a 3-bedroom flat, the living room is my office, okay, one of the rooms there happens to be my other office. So I only domestically reside in 2 of the rooms. So I have to apportion the rent to the business. Initially, the tax authority official said no. And the guy went to court. And the judge decided in his favor. Then as individuals in self-employment, don't forget, you have a responsibility to pay your own taxes. Not only that, you also have responsibility to deduct taxes from your employee's income and render that to the tax authority. The law is very clear now. Whether the employee is a temporary employee or permanent employee or casual worker, you must deduct tax. Then don't forget you have responsibility to deduct withholding taxes. Sincerely speaking, those are the issues that we normally have. When we go around to other people say, no, I did not, you are supposed to, and we start picking that you must deduct. Yes, the paid employment, if you are an employer of labor, you must file with the relevant tax authorities first and foremost the annual returns of income, which is on preceding year basis, on or before 31st of January of the year, and then on or before March 31st, you must also render to the tax office the income of your staff, so that they will advise you on how much to deduct from your employee's income. We know the tax law. We can calculate how much we should deduct. But it's very clear. You need the tax office to ratify what you should deduct from the employee's income. Please, a lot of people will just ignore. Yes, they don't file returns. You just have to file your returns. Returns of the income statement of your staff must be done on or before 31st March. The one relating to what we normally call in tax balance from H1 must be rendered on or before 31st of January. The law says the employer of labor must file returns relating to his activities with respect to the employee based on the preceding year basis on or before 31st of what? January. Is that okay? And now it was there, it has always been there, but no serious penalty was attached. Now, if you fail to file the Form H1 with the relevant tax authority, there's a penalty of 500,000 on corporate entities that will be imposed on you. Flat penalty, 500,000 naira. 500,000 corporate entity. Some of us that are individuals, 50,000 naira. Sincerely speaking, take note of that. Some of us that are yet to file our Form H1 returns, please go and do it. But by the time the tax authority wakes up and says, sorry, yes, you did not file, we're going to impose 500,000 on you. And that's what the law says. How will you reconcile 500,000 penalty as against the total income that you have to render? I mean, total tax you have to render.
500,000 naira fine. Wow. Surely it's getting hotter and hotter. Well, so much for the obligations of the individual under the Personal Income Tax Act, and so much for the obligations of the employer of labor, be it sole enterprise or a corporate body, a limited liability company. Next week, we are going to be looking at the roles, the obligations of ministries, departments, and agencies still under the Personal Income Tax Act. And that will come from the proceedings of a workshop that was organized by the Individual and Enterprise Income Tax Department of the Federal Revenue Service. It was held in Abuja on August 2nd. If you missed any part of this episode, or you want to watch a previous episode of Tax Matters, you can visit our YouTube channel via your mobile device or on the web. If you have questions, observations, and comments, like our Facebook page or follow us on Twitter. Of course, we remain available via email or by telephone. We want to thank you most sincerely for watching and want you to have a blessed week.